All right, so now that we have learned about marginal costing also, we'll now know what absorption costing is all about. So as the name suggests, absorption, we're going to absorb all costs that there are. So here, inventory valuation is going to be at all production costs. So all production costs meaning the direct costs which are directly attributable to the production. So all production costs, whether fixed or variable, are going to be included over here. Now let's also see what are going to be the advantages and disadvantages with this method. So number one that you see first, let's talk about the advantages. So the advantages which are associated is number one is that it complies with IAS 2. As I just explained in the previous video that in International Accounting Standard 2 wants you to value inventory at full cost or the net realizable value. So here you're taking all production costs, that's why you are complying with the IAS 2. Secondly, it helps you to control costs, helps to control costs. Now, how can that be possible? Now, when you're talking about absorption costing, you're having a look at your variable as well as your fixed costs. So that means if you have all of your expenditure listed down in one place, it helps you to see it helps you to analyze how much you've spent on what place and what could have been controlled. So I could give you an example over here. Let's suppose if you get some pocket money from your parents every month and you note down all of your expenses that this much money I've spent here, this much money I've spent here, and at the month end you see you've spent this much money in going out, you've spent this much money in buying your clothes. So different kinds of expenditures that you incur. Now once you know how much you spent where, you will be able to analyze that, oh okay, I spent too much going out this month, maybe in the next month I'm going to reduce on this expenditure. So this is how it helps you to control costs. Number three advantage that you're going to get over here is that these are more complete concerning the valuation of inventory. More complete concerning valuation of inventory. Because you are taking all production costs, your valuation is more complete because literally everything which has been incurred for the production, all that has been already included in the value of your inventory. So that's how this becomes another advantage over here for the absorption costing method. Now let's talk about disadvantages. Disadvantages that you will find over here with respect to absorption costing. Number one being that it is a complicated process. So absorption costing is complicated because here you are considering both the costs, fixed as well as variable. So it's a little bit more complicated than the marginal costing method. Second disadvantage is that it has a limited use in decision making process. There was one advantage that we had written for marginal costing, that it helps you in short term decision making, but because it does not help you in any sort of decision making, that's why this is a disadvantage that is associated with absorption costing, that it has limited use in the decision making process. With this, we are also through with the concept of absorption costing. The next video is going to be the last video where we learn that if we have used the two different methods, how can we reconcile our profits? Ultimately, profit figure is the same, just the treatment of the costs is different. So the reconciliation should get us to the same amount of profit using both the methods. So in the next video, we are going to learn about how we can reconcile the profits that we have calculated using both of these methods, and we'll also be doing a numerical.